morning, everyone. Welcome to Rebel with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst. I'm part of MarketSmith India team, which manages model portfolio. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It is very important to understand Nifty's daily price volume action to understand or to gauge the market going forward. If you look at the last two sessions, Nifty has seen a very strong volatile sessions, especially in the Wednesday session where Nifty has fallen and broader market indices, mid cap and small caps have taken more selling pressure. And in this process, Nifty breached its 21 DMA, which is a green line, and it found support at its 50 DMA, which is a red line here. And in yesterday's session, it was a very good session for the market. Both Nifty and broader market indices have also shown good buying interest from the investors. And again, 50 DMA has acted as a good support in yesterday's session as well. So going forward, 50 DMA is going to be the key support for the index. And if that level is breached on higher volume, we might see further selling happening in the markets. Talking about O'Neill's perspective, we are still in confirmed uptrend with a distribution day count of 3. And Wednesday's session was considered as a distribution day because the fall was more than 0.2% and the volume was also higher than the previous session. And today, one distribution day is going to expire in the evening, so we might declare the distribution day to 2 if there is no addition of distribution day in the today's session. And if the Nifty breaches its 50 DMA and higher volume and the distribution day count increases to 4 or 5, we might change the market status to under pressure. In such a scenario, we look out we look to book out profits or any stocks which are moving sideways. And if there is any stock which is breaching key moving averages, so we would like to exit that particular stock as well. Coming to the stocks which are in news and which will be under radar in the today's session, one is Railtel has received an work order amounting more than 113 crores of rupees from Odisha Computer Application Centre. Wipro has signed an agreement with Desjardins, which is a Canadian finance company, which is one of the leading finance services provider in the Canada. And under this agreement, the IT service provider Wipro is going to modernize its banking services. Bharat Electricals has received an order of 850 crores from L&T. And apart from this company has also bagged orders worth more than 1,000 crores of rupees. Eris Life Sciences is going to acquire the 19% stake in Swiss Parentarels for a consideration amount of 237 crores of rupees. In the yesterday's session, fund institutional investors were net sellers. They have sold more than 1,300 crores of Indian equities, whereas domestic institutional investors try to give support to the market by buying 139 crores of Indian equities. Overnight, US market closed in the negative territory, and three major indices which we track, Dow Jones, S&P, Nasdaq, have closed pretty much very similar decline with a similar decline of 0.3%. As we speak, Asian markets are also trading in the negative territory. Nikkei is trading with a minimal decline of 0.1%. Shanghai is trading with a decline of 0.4%, whereas Kospi is trading in deep red with a decline of more than 1.2%. GIFT Nifty is indicating a muted opening for the Indian index, but going by the global cues across the globe are on the negative side. US market in the negative zone, and Asian markets also trading in the negative. So the overall cues are on the negative. We might see selling happening in the Indian market going by the global cues. For the chart of the day, we picked the CMS Info Systems. So this has been put under our buy watch list as well. The stock is placed very good on the chart wise. It is trading the handle portion of its complete handle base pattern. It is still 5% to the pivot. We would like the stock to trade above the pivot on higher volumes. Ratings wise, it is looking good apart from a slightly lower RS rating. That RS rating is going to improve when the stock breaks out, but fundamental rating is very good at 90. And number of funds the company has attracted has been very good, and consistently for the last 4 quarters, this number has been rising, again a positive side. Overall, on the ratings wise and the chart wise, it is looking very good, and the stock breaks out at higher volume. It's going to be very good contender. And on the stop loss front, if you have this stock in your portfolio, you can keep its 200 EMA as a stop loss, which is a flat line here. Thanks for joining today's event. Have a good trading session.